Hello and welcome to the Workplace Gender Equality Agency's information video, which will give you an overview of how to report employee types and their pay in the unit level workplace profile. This video is intended for employers who are completing the workplace profile section of their report to the agency and have chosen to use the unit level template. Please watch our other information videos if you would like help with inputting employee types and their pay in the payroll aligned workplace profile, or if you would like a general overview of gender equality reporting. The workplace profile is a major component of the report that organizations must submit to the agency each year. It is an Excel worksheet that collects data on your employees as well as their salary and remuneration. This video will start with an overview of the workplace profile and then explain how to enter salary and remuneration data onto the profile for different employee types. Finally, the video will cover what happens when your profile is uploaded and how to resolve any issues. So now I will give you a brief overview of some key concepts to help you complete the workplace profile. The first step is to choose your snapshot date, as this will allow you to work out which employees need to be included in the workplace profile. You will then need to gather the pay data for each of these employees. The process for reporting salary and remuneration data differs depending on which workplace profile template you use. I will now go into each of these concepts in a bit more detail. To start preparing your data, you will need to choose a snapshot date for your profile. The workplace profile provides a snapshot of your workforce on any one date during the 12-month reporting period. That is the 1st of April of the previous year to the 31st of March of the year your submission is due. You are free to choose any snapshot date within the reporting period for the submission of your workplace profile. You will need to report the pay data for employees employed on your snapshot date based on their earnings from the 12 months prior to that date. This example shows a snapshot date of the 30th of June. For this date, the workplace profile would include salary and remuneration payments paid during the 12 months prior to 30 June. Your questionnaire and workforce management statistics submissions always relate to the full reporting period. That is the 12 months between April 1st and March 31st of the following year. To keep things simple, most organizations choose the 31st of March as their snapshot date. This means that the answers in your questionnaire, the data on your workforce management statistics worksheet, and the workplace profile will all cover the same period. The workplace profile will be populated with employees who were employed on the 31st of March. After you have chosen your snapshot date, you can populate the employees who you will be including on your profile. In short, you must report on all employees who were employed by your organization on the snapshot date, even if they have since left the organization. This includes full-time, part-time, casual and temporary or seasonal workers, trainees, apprentices and graduates, foreign nationals or expatriates working in Australia under your group, and employees who have worked overseas for less than 6 months. Anyone on parental or extended leave are also included. And in partnership structures, you must include any partner who holds an employment contract. If you are a corporate structure reporting on multiple entities at once, you must include every employee who works in Australia for each entity on the snapshot date. It is not intended that you populate your profile with every employee who has been employed over the course of the 12 months you are reporting. Employees who have left before or have joined after the snapshot date should not be included as they were not employees on that specific date. You do not need to include employees who have worked overseas for more than 6 months in a reporting period, partners who do not receive a salary other than the managing partner, volunteers or unpaid visitors, independent contractors, or employees of a labour hire or recruitment organisation who have been assigned to work in your organisation. Some organisations that do not meet the typical organisational structure may have more complex rules for who is or who is not an employee. You can search our Knowledge Hub for more information on which employees to include in the workplace profile. Once you have your employee list, you'll need to gather exactly what has been paid to each employee in the 12 months prior to your snapshot date. An important point is that you must base your calculations on what an employee actually earned in the 12 months prior to the snapshot date, not their contractual amount if these two figures are different. You will also need to note what payments are fixed or one-off and what are pro rata payments. All payments made to an employee in the course of their employment for this 12-month period are included. At the end of this data collection process, you should have a list of employees to populate into your workplace profile and know what they were paid in their component parts for the 12 months up to the snapshot date. You are now ready to complete a workplace profile. There are two different templates that you can use to submit data for this profile. You can use either the unit level profile or the payroll aligned file. Both files require you to start with the employee list from your snapshot date, as well as the pay information for each of those employees. You will also need to enter additional information about each employee. The columns that you see on the screen are common to both files. They are the employee ID, which is a field that's not collected by our agency. It is used by you to keep track and identify which row is which employee. The employing ABN of the organisation where the employee works. Occupational category, which is a 4-digit occupational code, and you can find a list of occupational codes on a tab in the profile. Manager category, this is for managers only, and you can find a list of manager abbreviations to use on the explanation tab of the profile. Level to the CEO, this is a voluntary column for you to indicate levels of leadership. Gender, you must enter either F for female, M for male, or X for non-binary or other employees who do not identify within a binary gender identity. Graduate apprenticeship status for employees who are part of a formal graduation program or apprenticeship. Employment status, which is either FT for full-time, PT for part-time, or CE for casual employees. Employment type, which is either permanent, contract, or casual. Year of birth and postcode, which are both voluntary to complete. And finally, industry class. This is a 4-digit code that must match one of the industries you confirm when you start your report in the employer portal. The next step is to enter the salary and remuneration information, and this differs depending on which file you choose to use. In the unit level profile, you will only need to report salary and remuneration under 2 columns, base salary and total remuneration. The figures you report for base salary and total remuneration must be provided as the employee's annualized and full-time equivalent earnings. In short, the 2 figures must represent what this employee would be paid if they had worked full-time hours for a full year. This figure is not a contractual figure, but is based on what the employee actually earned. All pro rata amounts should be calculated to this standard for both the base salary and the total remuneration field. The alternative file to use is the payroll aligned file. More data entry is required. You must provide the actual amounts paid to each employee in their component parts shown on the screen. Some payment types are split up by whether they were fixed or one-off, or whether they were pro rata. You must also provide an ordinary hours figure and an employee start date that corresponds to information you provide on the explanation tab of this file. Based on the figures provided, the template will automatically calculate pro rata payments to be annualized and converted to a 1.0 full-time equivalent amount. In short, the template will use the actual incomes and time worked for each employee to calculate the salary and remuneration, if required, to the standard for this report. Before beginning this section, a quick note to let you know that this video will now focus on the unit level file. If you are using the payroll aligned file, please watch the agency's information video on that file. So, how do you enter all of this data for your employees? One way you might like to compile your salary and remuneration data is to follow these 3 steps. Firstly, you will need to collect the salary and remuneration data for your employees employed on your selected snapshot date. This list displays whether different payment types go into the base salary column or the total remuneration column when using the unit level profile. Base salary represents payments that cover work for an employee's ordinary hours. Total remuneration is the base salary amount plus additional extras such as superannuation. You will need to know which column each amount will be allocated to, and if the payment was paid on a pro rata basis or whether it was a fixed one-off amount. You can search our Knowledge Hub for more detailed information on how to categorize payments in the workplace profile. Any employee that did not work full-time for the full year will need to have their payments calculated as if they did work for a full year for full-time hours. The easiest way to move through your profile is to allocate employees to one of 5 groups based on their employment status and work through each. You will need to separate out the pay data for each employee into their base salary and additional remuneration amounts, and to have those split between whether they were pro rata payments or fixed one-off payments. You will need to convert your pro rata payments into their annualized and full-time equivalent amounts. At this point, it's important to remember 2 things. Any calculations should be based on actual amounts paid, not contractual amounts. And you do not need to convert any fixed payments. They should be added onto the final totals as actual amounts. So let's work through the groups. Group 1 are full-time employees who work the full year. Start with this group because you won't have to convert their data. You'll already have what they've earned for the 12 months prior to your snapshot date. Group 2 are employees who have worked full-time but only for part of the year. You will need to annualize their earnings. Think of it like calculating what they would have earned if they had worked the full year. Group 3 are part-time employees who work for the full year. You need to calculate the full-time equivalent amount for this group, just as if they had worked full-time hours. Group 4 are part-time employees who did not work the full year. In this case, you will need to annualize and calculate their full-time equivalent earnings. Group 5 are casuals, and like Group 4, you will need to annualize and calculate to a full-time equivalent amount. We will use a simple example to demonstrate the calculations you will need to make in each of these scenarios. The agency also has a salary calculator on our website to help you do this. Consider a professional role that when an employee works full-time for a full year, they earn roughly $100,000 in salary or wage payments and $10,000 in superannuation. You can apply what is demonstrated next to any role or employee. For workers who have worked the entire 12 months on a full-time basis, you should enter their actual base salary and total remuneration amounts for that 12-month period. You can see that in this example, the employee worked the entire year and earned $100,000 in base salary and $110,000 in total remuneration when superannuation is added. These amounts are entered without requiring a calculation. If the employee worked full-time hours for less than 12 months in the lead up to the snapshot date, you will need to annualize their pro rata earnings as if they had worked for the full year. If any employee has periods of unpaid leave, you should also treat this as a part-year employee. To calculate their annualized earnings, you should divide what they were actually paid by the number of weeks they worked. This will give you a rough weekly pay rate. Multiply that weekly pay rate by 52 to get the annualized base salary. Repeat steps 1 and 2 for additional pro rata earnings, such as superannuation, to get an annualized amount. By adding them both together, along with any fixed additional payments, that will give you the annualized total remuneration amount. In this example, the employee worked for a month and earned $8,300 in base salary and $830 in superannuation. Following the steps from the previous screen, when this is annualized, it works out to be $107,900 for base salary and $118,690 for total remuneration. If the employee was employed part-time and worked regular days for the entire 12-month period leading up to the snapshot date, you will need to convert their earnings into full-time equivalent amounts. To do this, you would divide the employee's base salary or total remuneration earnings by the number of days they worked per week. Multiply this number by 5 to calculate the full-time equivalent base salary and total remuneration amounts. In this example, the employee earned $61,800 in base salary and $6,180 in superannuation for a 3-day working week. Following the steps from the previous screen, when calculated to the full-time equivalent, it works out to $103,000 in base salary and $113,300 in total remuneration. If the employee was employed part-time but worked irregular days for the entire 12-month period leading up to the snapshot date, you will need to convert their earnings into the full-time equivalent amounts. To do this, you would first identify how many days or hours the employee worked in the 12-month period, as well as how many days or hours a full-time employee would have worked during that same period. Divide the employee's base salary or total remuneration earnings by the number of days or hours worked to get an average daily or hourly pay rate. Multiply this daily rate by the full-time equivalent amount, and that's either the hours or the days that a full-time employee would work, to calculate their full-time equivalent base salary and total remuneration amounts. In the example, the employee worked 100 out of 260 days and earned $39,000 in base salary and $3,900 in superannuation. Following the steps from the previous screen, when calculated to the full-time equivalent, it works out to a base salary of $101,400 and a total remuneration amount of $111,540. If an employee was employed part-time for less than 12 months leading up to the snapshot date, you will need to convert their earnings into both full-time equivalent and annualized amounts. To do this, you would divide the total number of hours or weeks worked in the 12 months to your snapshot date by the total number of hours or weeks that is considered a full-time workload for that period. This will give you a rough full-time equivalent fraction. Divide the employee's earnings by this fraction to calculate the full-time equivalent salary. In this example, the employee worked for 100 hours and earned $5,000 in base salary and $500 in superannuation. This is a workplace where 1,976 hours per year is the standard, which works out to about 38 hours per week. Following the steps from the previous screen, when calculated as a full-time equivalent amount and then annualized, it works out to a base salary of $98,814 and a total remuneration amount of $108,628. If the employee was employed casually for 12 months or less in the lead up to the snapshot date, you will need to firstly identify the employee's actual earnings for the period and the number of hours worked to earn that amount. Divide the earnings by the number of hours worked to get a rough hourly rate. Next, you must identify how many hours would be a full-time, full-year workload for that employee, and then multiply their calculated hourly rate by that number. This is the annualized full-time equivalent salary. In this example, a casual employee worked 60 hours and earned $3,300 in base salary and $330 in superannuation. In this workplace, 1,976 hours is considered full-time. Following the steps from the previous screen, this calculates to an annualized full-time equivalent base salary of $108,680 and a total remuneration amount of $119,548. Finally, I will cover how you upload this profile in the WGEA portal and what happens to your data. When you are ready to upload your file, log into the WGEA portal and access your program from the Programs menu item. Once you have confirmed the details for your submission, you will have access to all sections of your report to complete. To upload your workplace profile, you will need to drag and drop your file into the Upload section of the Workplace Profile page. Your file will take between 40 minutes and a few hours to be validated and checked for any data anomalies. You will receive an email when your file has finished checking. If any issues are found, you can click on the Issues Found hyperlink on the file you uploaded. To resolve the issues listed, you will need to read the description and view the instruction article if it is not clear what needs to occur. When you have uploaded your workplace profile and it is either free of any issues or any issues that were found have been resolved or explained, this section will be complete. To help you complete your report, you can access resources and support from the agency. Firstly, you can explore our Knowledge Hub and select relevant topics for targeted information or search for your questions and keywords in the search bar. If you can't find the answers you need in the Hub, you can also use our live chat function or lodge a support request. You can also visit our website to submit a support form on the Contact Us page or explore our educational guides, tools, and resources. Thank you for watching this video explaining how to add different employee types to the unit level workplace profile when reporting to the Workplace Gender Equality Agency.